Hey guys, welcome to Max and Elijah Take Over the World. TGG.
No, that's later. That's later.
Oh, tonight?
Yeah, today, right now, is our Instagram Live.
Oh, okay.
This is the webinar.
Got it. Okay, this is webinar. Sorry, I'm so disoriented. But today we're going to do a FAQ, which is a fax machine. No, it's a frequently...
Tell us the facts, Elijah.
Tell us the facts. The frequently answered questions.
Asked.
Yeah, I know.
If they're answered, then why do they need us?
That's right. So, first question is, why did you just turn off the fan? I guess it has to do with the noise quality for the video.
Yeah, sound quality. Check, mic. 1, 2.
Okay, mic, check the mic. First question that we got from a anonymous questioner, interrogator, was how many deals does TGG look at for every deal that TGG buys? And I think the question is along the lines of how many properties do we analyze? Do we underwrite? Do I scribble something on a napkin? Does Maxx underwrite it on 4 computer screens? And it's a great question. I think you have a model for the answer.
Yeah.
And I can just ballpark it, right?
I mean, we have 4 people in our office that are always looking at deals. That includes us, so maybe 5. And
4.5.
And I mean, we're looking through everything that's on the market, deals that are sent to us from brokers, calls to owners. I would say on any given day, we're looking at probably in the realm of 250 to 300 deals a day. I mean, that's also deals that we're following up on, right? So it's not new deals. But in terms of phone calls being made, deals being looked at and underwritten, I wouldn't say we underwrite all of them because there are a handful that we look at. We know off the bat they're asking $2 million. It's probably like a $1.25 million deal for us, or 1.5, or 1. Like, we kind of know, and if we know that the metrics are so far off for us, we'll almost just pass on it.
Pass today.
Exactly,
Pass today.
And wait for the follow up. So, yeah, I think we're probably looking at, if we probably offer on 100 to 200 deals a month. Would you say?
Sounds about right.
Yeah.
I'm sure you modeled it out. I'm sure you know. But I think the real answer is that this is a follow-up. I always call it an FU business. Not how you're probably thinking, but in terms of follow-up. I actually remember my first week in real estate. I worked at a property management company, and I had a piece of paper on my desk, and there's a sticky note, a pink sticky note that said FU. And I said, so what did I do to you? Give me a pink sticky note that says FU, like, okay. But I asked.
If it was yellow, it would have been okay.
Yeah, of course, or blue or whatever. But it stood for follow-up. And since then, since the first week in the business, follow-up business, it's really true. If anyone's in this business as a broker, as a buyer, as a lender, as a mortgage, really anything that you're doing in this business, probably anything in sales, anything in acquisitions, it's all about follow-up. It's usually the first touch, the first time you speak to someone, the first time you make an offer on a property, the first time. Sometimes you get that magic and it's just like, hey, we're ready to go. But more often than not, it's throwing a feeler out there, putting it in your tickler, as they call it. I never understood why it's called a tickler, but following up with it in 2 weeks, 2 months. We're closing a deal in about 2 weeks. Max and I offered on it 2 years ago. It was the first time, and very excited to announce that acquisition in the next couple of weeks. But I'd say the numbers that you threw out are probably in the range of, obviously these things vary day by day, depending how much coffee and espresso we're drinking. But we offer, and we talk to a lot of brokers, we talk to a lot of owners, put out a lot of feelers, and then continuously follow up, and then things, they end up clicking.
Exactly. And what it all sounds like is the amount of time and energy that it goes into. You're not just going to look at one deal and be like, okay, that's the one I'm buying. You're going to have to weed through the things that don't fit, whatever your criteria is, whatever you want in a property. You're probably going to have to look through many deals just to find the one that's going to be the right fit. And then offer on it, unless you're coming in with everything the seller wants, you're going to have to follow up and continue hunting that deal until we get it 2 years later.
Mm-hmm.
They don't all take 2 years, so don't be discouraged. The next question, this is a good one. This is one that got asked after one of our previous Instagram lives, is why does somebody buy a value add property, which value add would mean it's a fixer, it needs work, the income is below market, the rents are lower than what you can get for that property. So a value add property versus a stabilized. A stabilized meaning it's turnkey, it's fixed up, it's ready to go, and it's almost like seamless owning the property. So why would somebody buy a value add property versus a stabilized property?
Beats me.
Well, I stumped you.
Well, a value add, yeah, exactly. A value add property is a property that's not performing at its peak ability. So let's say you have a 10-unit apartment building and you have average, they're 1-bedroom units and their average rent is $1,000, but you think, hey, in this market we can get $2,000. So that's a value add deal. You have rents that are below market. Okay, it could also be a house that's just in bad shape. That's also a value add deal. You could have an office building that has a very high vacancy factor. So people buy those properties because they can add value. They can work on the property, they can increase the income, they could reduce the expenses, they could beautify the property, they could do all sorts of things in order to make the property a better property. And what that does is you can take the value from, let's say, $1 million to $2 million or $100 million to $200 million, okay? The person who's doing that, they're looking to make money on the value that they've added, the value creation. Someone buys a stabilized property because they don't want to go to work, they just want to place their money into something that's turnkey, it's giving off a cash flow yield, and generally speaking, they don't want to do the work. They want to buy something that is already in place and it's already performing. Anything to add?
No, you stumped me after.
I should have saved a part of it for you.
Yeah, and the real difference is in what you're saying is that a stabilized value, what you're buying it at today, it's probably what it's going to be worth, depending on fluctuations in the market. Whereas the value add properties, you can increase the value, you can by adding value to it. So that's where I see the really big difference. And then you have somebody who's buying value add, doesn't want to have to show up at the property every day, track things, handle the construction. So you kind of get what you pay for, essentially. It's like, do you want the increase in value, or do you want to be making 5, 8, 10% on your money? Ease of use kind of thing.
And it's also important to note that if you buy something that is stabilized, generally speaking, you bought it for $5 million. There's no way to make it worth, $10 million. There's no way to increase the value. So there's something to be said about your downside risk when you buy something that's stabilized, that, hey, if things go bad, this thing could theoretically be worth less. Same thing, people buy new construction properties, right? So if the market goes up, then great, that property will increase in value. But if the market goes down, hey, you're at the top of the market, the value could go down, especially if you're buying new construction and that 10 years from now, it's not new construction anymore. So exactly. Just something to keep in mind.
Yeah, definitely.
Next time you're looking to buy a new construction.
This is the next question is kind of a two-parter. It's two questions that fit into one. It's actually something that, funny enough, we actually had a long discussion about yesterday during our asset management meeting. Look, we don't know where the market's going. We don't know where the economy's going. People thought we would be in a recession by now, but the stock market's at an all-time high, so we're not in a recession. But yet people aren't working. It's a weird time, and if people don't go back to work, are we going to be headed toward a recession? And are we 6 months away, 12 months away? So something that you and I discussed is if we do hit a recession, if the market changes, what asset classes are going to get hit the hardest? What assets are going to shift the most in value, good or bad? And then the second part of that is, okay, if the market does shift, then where do we see potential opportunities? Like, where can we capitalize on a shifted market?
Right. And so I think the question is, what's going to get hit the hardest, and then where's the opportunity? You would think that it's the same thing. So if we're going to say, everyone knows that office buildings are getting hit, right? Because people are working from home. A lot of companies are moving out. The tenants are moving out of the office buildings. So everyone knows that office is getting hit hard right now. The question is, just because it's getting hit hard, does it mean that there's going to be an opportunity? And the answer is, like most things in life, it depends, right? So it depends on the location, it depends on the building, it depends on the demand in that marketplace, and it also it depends on what can you do with the property. Can you take that office building and then turn it into residential? Could you do a live work type of thing? What can you do with the property after you're able to purchase it, hopefully at a distressed price? So just like quick answers. Office, pretty obvious, and then hospitality, hotels. People are definitely the last couple of months, occupancy rates have been down, and there's going to be distressed opportunities in hospitality. And I'll let you talk about kind of where the opportunities are in terms of how to make those deals work.
For sure. I mean, you brought one up already, is this live work, and you said something good yesterday where 6 months ago,
thank you,
give you credit where you deserve it, is 6 months ago you told somebody, I work out of my home office. They thought you were crazy, that
or just a bum.
You don't have a job. Now you tell somebody you're going to the office, they're like, don't see me for at least 14 days until you quarantine. So we do see a potential shift into more remote workers. So live work, I think, would be an amazing opportunity where you can either convert current office space into a live work, convert it into residential and create spaces for people to set up their home office, or potential ground up development. You can do live work. And I think that's another one is ground up development could be something new, especially where we're seeing things come up with the elections in November. We could see some opportunities, a shift away from certain asset classes into more ground up development, potentially single family homes. California has added this new ADU law, which, you can add an additional unit to property. So we're seeing a lot of people go into that market where you can add units. Maybe you take a duplex and you add a third unit to it to increase the value. So that's where we're kind of seeing potential opportunities. Retail is one that, before all this was a little bit on the decline.
Yeah, good point. Retail.
And we're seeing it even more so now, especially because companies don't want the overhead. If you're a small business, do you really want the overhead of $5-10 grand a month in rent and utilities and expenses and certain inventory or things that you need to run your business out of a brick and mortar, where you can just go online, do e-commerce, and not have that $10,000 overhead? So retail is interesting. I don't know exactly what you can do with retail. Single tenant, whatever it is. But there is going to be some opportunity there. There's some distressed sellers, distressed owners, because they don't have income anymore. There's no tenants occupying the retail space.
Right, and then the other opportunity that may be coming up for people that are looking to invest, depending on what happens in the election with, 15 is the property tax reassessment, right? So you got Proposition 15, if it passes, could increase people's property taxes. So in California, if you have a property that you bought, let's say, 30 years ago, and you're paying $10,000.
It's too hot in here. I got to turn the fan on. Sorry.
Something I said. So if you bought a property a long time ago and you're paying $10,000 a year in property tax, but property's worth $5 million now, and you should be paying $60,000. Well, guess what? You may have to start paying $60,000 a year in property tax. Okay, so someone who's got that big bill, now they're gonna be like, you know what, my cash flow went down, I have a lot of equity in the property, I'd like to sell it, take that equity, and buy a different property in a different market, a bigger property in the same market perhaps. So that could also bring up potential opportunities in the next, in the next 12 to 24 months.
Definitely, and I guess this could have been a three-parter, because then there's also discussion of, well, how are interest rates going to shift the market, or if interest rates change at all. And I was watching, because I'm so intellectually smart, I was watching CNBC.
He actually is, yeah.
I was watching CNBC today, and they had somebody on from Morgan Stanley, and they were talking about the bond markets and the yields, and he was just saying, like, the Fed came out in their minutes, I think it was like earlier this week, that they're not going to be changing interest rates. The economy, GDP is going down. It's on a decline right now. They're not going to raise interest rates. They're not going to suppress the economy. If anything, they would like to lower interest rates, but they're already at zero. And so they're not going to go negative. So for me, I really see interest rates staying probably about where they are. The only thing that we saw happen is when coronavirus came out, is you saw lenders where they were lending at 4% jump to 5%.
Right.
So your borrowing rate did go up. We've seen it start to come down. We would like to see it normalize, but in terms of where the bank's borrowing, I think it's probably going to stay around 0% to 0.25%. But we may see banks start to come back down to where they were about 6 months ago.
Depending on what happens with the stock market.
Definitely.
Okay.
And elections.
Okay, I'm glad Max knows where interest rates are going because I have no idea. But if I were a betting man, I would agree that the interest rates are not going to be going up. They'll probably stay where they are in the next next year or so. A lot going on in the world, right? So we got a virus, we got an election, we got potentially big changes coming to the residential market, property tax valuations, a lot going on. So it's important to stay abreast of the market and really understand where we're at, and that's what we do, right? We're constantly talking to people, making offers on properties, following up with brokers, owners, and staying on top of the market. But even as much as we stay on top of the market, there are still questions that linger, and we just have to underwrite deals conservatively and make sure that we are protecting ourselves and our investors. I'm going to go for the next question. I'm going to ask this one.
Do it.
Because I don't know the answer to it, so I better ask it. So, if it wasn't real estate, what would you be doing? What would you be doing?
I'll let you answer that first.
For you?
No.
So, if I were Maxx Feldman and I didn't work,
I don't want to hear the
probably be a GQ model.
No,
but beyond
nice.
that, what would you be doing?
Well, so we'll probably talk about this at some other time. We'll talk more about the Goldfinger group and how we met. But before this, I was actually in oil and gas. I was a chemical engineer.
He wasn't actually in oil and gas, by the way. He was working
in the industry.
In the oil and gas. Because I just saw a visual of Max in oil and gas.
Not a good sight. So I was a chemical engineer before this. That's what I studied in school. I designed refineries and petrochemical plants. I would imagine I'd probably be in the engineering field. My dream, I don't know if this is like a question, if like what my dream would be, or I'll answer both. So practicality basis, most likely I'd be an engineer, whether it was in oil and gas or it was biomedical, which is huge in California. My dream growing up was to be a pitcher in the major leagues. I played baseball through college, so that was always my dream. And I hate to say it for all you Dodger fans, but it was to pitch for the Yankees. That was always my dream.
All right, we're gonna have to stop this.
Did I filibuster? Did I filibuster long enough though for you to come up with an answer?
No, I mean, look, I definitely had dreams. I wouldn't say aspirations or anything. I definitely had dreams of like playing in the NBA. As a little Jewish kid. Growing up and making 5 threes in a row. Like being able to touch the net. The bottom of the net, right? So. But I was actually working in the education business. I started a tutoring agency about 10 years ago, and at the same time that I started the tutoring agency, I was also working for a few different real estate companies. I recently sold the tutoring agency just because I couldn't I wasn't devoting enough time to it, so I had a partner in that business that I sold to, and we're still good friends. We still talk all the time. And thankfully he's doing really well with the tutoring business. I found it to be a very rewarding business because I benefited a lot from having tutors in school, and I felt that because of that I was able to help a lot of students. I was able to understand what they weren't understanding within their studies, and then because of that understanding of what wasn't clicking, I was able to help them and really connect the dots and make it make sense. And so I still am very passionate about tutoring and education and really helping children that are not maybe the best fit for a classroom setting. And I think that there's still a lot of opportunity in the education space. But at the same time, I knew that we wanted to grow the Goldfinger group. I needed to devote my attention and time and energy to that. So for that reason, I sold that business. But if it wasn't real estate, I probably would be still in the tutoring business.
I don't know if that's a good thing or a bad thing, but we'll let the judges decide.
We'll let the judges decide.
Well, thanks for joining us. We want to keep up the Q&A sessions. We really want to bring, and I say this every time, you know, we could sit here and talk about whatever we want to talk about, but it's really what matters is what matters to you, and bringing value and valuable information to the table that's digestible, and kind of get an inside look into people who are doing real estate every day. So constantly reach out, constantly send us your questions, and we'll keep these up, whether it's, you know, every 3-4 sessions, we'll probably end up doing a Q&A.
Absolutely. We'll keep doing it. We love you guys. We appreciate the support. And we're off to dinner. Take care.